Today is April 14th, 3:40 p.m. and Charles Schwab will be reporting earnings on Monday before the market opens, April 17. And we saw these unusual options and wanted to make our prediction on Charles Schwab. Will it crash down some more since its lows was at 45, or will it rally like the other banks today that reported earnings? So let's take a look at the unusual options, and I'll share with our trade what we did as well. So this was what we saw here for these April 21s. The more unusual ones we saw was these 6,580 of them here. These were done at this time, and we also there was another one here at 246. Also, this was 1,000 of them here. So let's go over those two first. What do they mean? And then we can go over the big elephant in the room here. This one's even larger at 1052. Okay, so let's start with this one here. The most recent one at 246. This is April 21. These are all earnings because these expire in just 7 days. It's the closest expiration, the 48 puts and the 54 calls. And so here we are. So these 48 puts and 54 calls, right? So the 48 puts are over here. And we think they were selling these, even though the volume is less than the open interest, and then they were buying the 57s. These were opening for sure because they're much greater, these 57s. Well, that's actually for this one. Sorry, 57 calls is the 1249 one. Right, the one over on the 246, that's 54 calls. So if we look at the 54 calls here, you'll also see here it is greater. We are actually in that position. So we actually bought that one and sold the 57 to create a vertical bullish spread. Using these two strike prices that we see on the unusual options. So the put side on this for this one was the 47 puts. So if we look back again at the 47 puts, this one's definitely an open order. You see here it's much greater than the open interest. So we also think this one's selling the 47 puts and then buying those calls over here. Right, so all of this, selling the puts, buying this, it's actually creating a synthetic spread. So, for example, here, doing that, selling the 47s and buying the 57s, you analyze that, and you could see here this is a bullish trade. If the price goes up, it starts to profit, and if it goes down, it's a loss. This is their break even here at the about 46.4. And interestingly, that is close to its lows on that crash, the day of the crash on Schwab back on March 13. So it makes sense that was their kind of break even, that they don't think it would drop below that after earnings. As long as they wait, they will have a risk reduction if it does go against them. Okay, so that is the 47 and 57. So it's the same thing here with the He's selling the puts and then buying the 54. It's a synthetic bullish trade where they get a lot of leverage, and just for 7 days, a lot of leverage without having to own the shares. So they get that near like 100 delta without buying 100 shares, where that takes a lot more capital. Okay, so if we look at the April 21s here, the big elephant with the large quantities here. All right, selling the 42.5 puts. Okay, so if we look at that and we look at the 50 puts here, what is that here? You see the 50 puts over here. It's actually less than the open interest. Okay, and also the 42, what do we have at the 42.5? You see here the 42.5. You see it's actually pretty close to the open interest. It's quite a coincidence that it's all near that 16,900 range, right? Just a difference of like 30 contracts. It could be other people buying into this or selling into this or closing and things like that. But when something is this close, it just looks like a more likely that these are closing orders. Okay, so these orders that are being closed are telling us that it's not necessarily anything of significance, and so we don't necessarily let that distract us based on the data, and yeah, and so these definitely it could also be hedges, right? Somebody buying if they really believe it was going to drop, they bought the 50 puts and then bought the 42. It's possible that they did a bear put spread. But since these volumes are very close and this one's less, we don't think these are necessarily open orders. And so we prefer to focus on the ones that have more clear indication that they are open orders to give us a better direction of what is going on. Yeah, so it is, and so our trade, if you had seen it originally here, it's simply a vertical bull spread, buying the 54 and selling the 57. It's going for $65 at the moment. You'll see here it will profit as it increases, as the price increases. So this is just kind of our directional bet on the earnings. It has that potential of turning $65 to potentially $233. You'll see here at expiration. And so that's a factor of at least 3.5. So we could potentially make 358% with this trade. So and it's just 1 day, so the theta is not so much of a concern because this is just an earnings bet. So to risk reduce this is just depending on how many quantities you buy of this, and so you want to manage that based just on the quantity, and then we'll take the trade off after earnings most likely, unless it does break certain levels, and we may just let it have that positive theta. If it breaks this 57 point, then we'll start getting positive theta until the end of the week, and then maybe we'll close it by then. All right, 10 more minutes and the market closes. We'll put this video up quickly, so if you wanted to take a look at it, you'll be able to act on it right before closing. All right, take care, everybody. Good luck.